Hello everyone, good night, good morning or good evening. It depends on where you are. Welcome to this new webinar. I'm doing a quick sound check. Can you please tell me you hear me and can you see the mouse moving across the screen? Hello everyone. Okay, good. Welcome Benu, Anwar, Said, Neil, Embry, etc. Good morning, Embry. Okay, good. So, let's see. Let's start. Okay, you can see me. Okay, good. Okay. We are, you know how this goes. We'll accept any suggestion on any scenario or asset, stock, forex, index, whatever you want to analyze, but please be very specific as per the question or the scenario that you want me to look at. I'm going to start today with a couple of stocks because one of you sent me a private email asking me to please go over Shopify and LK. So I'm going to start with these two, and I will be reading your questions and your suggestions as okay. So on these stocks, we're going to be using the 3 months, monthly here, weekly, and the daily time frames. So we are going to look at now Shopify at on the 3 months chart. So it is clearly in an uptrend, but now I'm going to ask you a question. Am I allowed to go long right now? And if so, where am I allowed to go long? Anyone? It's clearly in an uptrend, obviously. But what do we have here? We have 3 months in an uptrend, and we have a 3 months area of demand right there. Okay? It would have been great to have price overextension. Which time frame, Anwar? It would have been great for price to do that after those 2 easy candles, for price to drop all the way down there. So that would have been great. Okay? So now we had a bearish engulfing pattern on the monthly. Okay, on the 3 months chart, yeah, 1 CP, 2 C, yes, overextended, and on the monthly probably as well. But what I'm trying to say here now, on the monthly, we've got another super strong imbalance right there, made of several ESC candles. As you can see, we've got one over there, 2, 3, 4, 5, 6. Then it bases tries. It would have been great for price to do that, or even here to the monthly interchange zone. Okay, but it didn't, and it created a bearish engulfing pattern right there. So after a super strong rally, we are not allowed to go long. And what can you tell me about this price action right there? Anwar or anyone? Were we allowed to go long there? What is that? Right there. We were not allowed. Exactly. And what about which reason? Anyone? We are talking about this all the time in the community and in the lessons. We've got a bullish impulse, exactly, Anwar. I did not consolidate away. We've got rally, base, rally. As you can see, it did not consolidate away. If we had had something like, let's say, go back in time, okay, and imagine this scenario. We have another ESC candle like that, then that would have been confirmed, and it would have been a possibility, okay, but it didn't happen. What happened instead was that it engulfed super strongly, okay. What the hell is going on here now with this repeat functionality? Now, okay, good. Sorry. So since price did not consolidate away here, and this usually happens after a very strong rally, price gets exhausted and it's ready to drop lower. But in this case, it was like trying to do it, but it just couldn't. So we have monthly still in an uptrend, 3 months in an uptrend, and the weekly got out of alignment. Why out of alignment? Because we had a valley here and a one over there, even overextension, if we consider this is a valley, so it cannot be overextension, so it doesn't really matter. But we've got the trend line broken, and at the very top we've got now the weekly area of supply in control. So what would we do now? What is the way to analyze this stock? What is the scenario here? What are we allowed to do and where? Venu, you are there asking or saying something? Or anyone? What are we allowed to do? Weekly demand created. Why? I know what you're talking about, but I want to verify that you are referring to this one, I guess. Why is that a weekly area of demand? Because we've got here that. Okay, trend line broken. So I guess that's the one he's referring to. So we've got here a brand new area of demand, and look, we've got 1, 2, 3, 4 ERC. If this candle on the weekly ends up like that, we're going to have a very strong imbalance down there, way stronger than the bearish impulse. Right now, Anwar is asking, no longer allowed a weekly cost supply in control. Which weekly are you referring to? Here, down there, Anwar. Okay, we are not allowed to go long on time frames smaller than the weekly. We've got the weekly area of supply right there in control. So going long on time frames smaller than the weekly, like the daily, 4 hour, 1 hour, and the like, is not allowed. And not only because of that, but because after a super strong impulse, we are not allowed to go long. And again, so we've got a strong impulse and supply in control. So that's a combination that is telling us no way am I allowed to go long. Okay, Venu saying maybe the last weekly candle, but week not yet completed. Yes, we don't know. Right now we are too high in the range. Could adjust the supply zone like that. It is in control. So if at certain time frame, like right now the weekly time frame, is in control, we are not allowed to go long, and this is a fresh area of supply and original area of supply, so we cannot go long in smaller time frames. Not allowed per the rules. The weekly is the anti-time frame. Yes, we are talking about 3-month sequence. So in the 3-month sequence, the weekly time frame is the anti-time frame. So we are not allowed to go long. We have to wait here. But if you were using the weekly sequence alone, that is the weekly time frame, then the daily and the 4 hour, then the weekly is out of alignment. So we can go long and short. So we can go long there and short there, but in confirmation. So we need new areas of supply created there in order to go short, and when price reaches that area in the weekly sequence, we need new areas of demand created. Make sense, Anwar? Those are the rules. We have to wait. Remember that the bigger picture is bullish, so it would be better to go long than going short. Okay? So that's what we have on Shopify. So on Shopify we have bigger picture, uptrend, waiting for new areas of demand is the way to go. We have that area over there. As you can see here on the way up, price action was very, very poor. Okay, 1 ERC, just 1 ERC, 1 ERC, nothing like 2, 3 ERCs. This is the first time in months that we have several years consecutive ERC candles on the way up. Okay, so we have a bullish bias, but no longs are allowed right now. Make sense? Any questions about this scenario? One of you send me an email today asking for the analysis of this one. Okay, clear. Okay, good. So we're gonna go. We're gonna do LK. This is the first time I see this one. I've added it to my watch list because of that, because it has a lot of market capitalization as well. I think it was 7 billion. It's a new stock, but it has a pretty good price action. We have just like 9 months of price action here, so that's all we have. But we can see The price has been running from $14 to now like more than double, and a super strong bullish engulfing pattern. So if price action on the 3 months time frame alone is telling us that we can only go long on this stock. It's a brand new one. So we've got now here the monthly. So this is all-time highs. Okay, all-time highs. If this candle over there consolidates away, and it's gonna be very, very rare than in less than 2 weeks price drops all the way down there. So that means that we are going to have at the end of the month, December 2019, and the end of the year, a brand new level of demand that we could draw like that or like that. Okay, if price approaches that area after consolidating away at the end of December 2019, then we are going to be able to go long down there. Okay, makes sense? All good? That's on the weekly sequence. We've got a monthly trend line connecting these two. Valleys, all-time highs broken, super strong bullish impulse that create with one ERC that is pretty wild, very wide. So longs is the way to go. So what can you tell me about the weekly time frame here? Anwar or Venu, Said, Niraj, Neil, anyone? Can you tell me about this? We've got an uptrend there. Okay? So where would you go long? Here. No, sure. That wouldn't be a place to go long. So if we read price action here, we've got all-time highs broken there. All-time highs. So this bullish impulse that originated there on the weekly rallied there, 2 ESC candles, and consolidated away with this candle 1, 2, 3, 4 weeks, and now the 5th week. So we've got a pretty good consolidation away on this impulse. So since this bullish impulse was strong enough, we're going to go use this low over there, was strong enough to consolidate away with several candles as dictated and by the rules. So we are allowed to say that this is a very strong area of demand on the weekly, which happens to be nested where? It happens to be nested right here, right there. Monthly area of demand. 3 months demand zone is not correct, Benu, because this is not demand. We need one more candle until the 1st of April 2019, 2020, yes. We are not gonna have a 3 months area of demand over there. But we have a bullish engulfing pattern as confluence as per the rules, so it's good. Okay? So that's the way to go. In the 3 months sequence, we've got 3 months bullish bias because of this price action. We've got monthly 2 valleys, and super strong area of demand will be confirmed at the end of 2019. Okay, December in about 12 or 13 days. And we've got a pretty strong weekly area of demand at about $20 per share nested right within the monthly area of demand and the 3 months bullish engulfing pattern. So as you can see, everything is connected. We need 3 time frames. Okay, 1, 2, 3, and then we go back and close the circle. Make sense? That's the way it goes. Right now, going long here is pretty aggressive. We've got an area of demand there on the daily. Okay, but it is nested within this bullish impulse and in the middle of a potential correction on the way down. So it's very, very aggressive to go long down there. So this is a good stock for the future, maybe in the middle of next year or March, April, or something like that. Price will retrace. It doesn't really matter if we have to wait so much time. Why? Because we have hundreds of stocks doing similar things or doing nothing. You just set the alerts, and when the alerts are triggered, we are gonna look at these charts and see if price consolidated away, if the arrival is correct, if the trend is still the same. You don't need to look at this one every single week or every single day. You just place an alert right there, more or less, okay, over there. Or you could even place an alert right there in the middle just to check price action and to see what happens, because price could drop down there to the 50% retracement on the weekly, and then from there create a weekly bullish engulfing pattern, and from there daily wow longs, daily wow long trend line break broken right at the confluence. So that's the way to do it. So waiting for further bullish price action and all that, it could happen, but it's not likely after that strong impulse. All good? Any other questions? You are not asking anything really, but maybe you're just listening to what I'm saying. Okay, good. We also have again here the same concepts over and over and over. Super strong rally here. So after strong bullish impulse, we are not allowed to go long in higher probabilities. So the edge is to wait for price to retrace. Good. So let me go over first on the stocks, on this one, and then Roku, and then Twitter, and then Valero Energy, and then we're gonna do some Forex cross pairs, and even gold, Bank Nifty, and Venu. If you want me to analyze any Indian stock, I'm more than welcoming you to tell me which one, okay, and anyone. Embry, you can ask me about Chinese stocks if you want. I don't know if TradingView does that, has any Chinese exchange. I guess it does, but I can do that as well. Okay. So let's take a look at Tiffany & Co. So again, we've got, look at what we have here. Tiffany & Co. We've got the 3 months out of alignment. Why is the 3 months out of alignment? Anyone? Why is it out of alignment? Waiting. Okay, Embry is asking me to analyze something like SH comp. Okay, any other? Embry? Breaking trend line, Anwar says. Well, yes, tricky one. Why? Because this doesn't look like a valley, and this neither. So, but what we do know is that we have all-time highs. Okay, all-time highs. So all-time highs, that means that if a bullish impulse is strong enough to consolidate away, we're going to have demand. So that impulse here consolidated away. 1 ERC candle alone. So it consolidated away over there. So this is demand because of that. So if that is demand, then this one at the top should be supply. So supply right now on the 3 months is in control. So we cannot go long right now. Why? Because we have supply in control. But what can you tell me about the recent price action on the 3 months chart? What do you think could happen with this 3 area or 3 month supply area? Can you tell me? What do you think could happen? And Anwar saying is pointing out the bullish engulfing pattern right there. Okay, so this is what we call an attack. This is an attack. It is attacking that area. So what do we have? What can you tell me about this price action here? What can we do there? Embry, is it your network problem that the picture and sound are out of sync? You are the only one. You are the only one pointing that out, Embry. I don't know about the others. Anyone having problems with the sync between my voice and the screen? Oh, it looks good. No one is having that problem, remember, so it should be your side, something on your network, not mine. Okay, so not only that, Anwar's a kind of balancing. Well, but what can you, Anwar, can you read price action here on these three candles? What kind of price action do we have there? Don't we have, well, four candles? Drop, rally, drop, rally. Don't we have a tilted W with two valleys? Make sense? You know what I'm trying to say, Anwar? What I'm trying to say is that we have a bullish trend line there, not an uptrend. So that even helps the attack. We are having like, okay, we want to, the market's trying to drop lower, okay? Short, because there was a very strong area supply created, it dropped lower. So he said, oh no, I'm not, still, we want still to sell. Okay, it drops, but it can't even make a lower low than this low. So not good. So that means that we are creating higher lows of, probably this is a 6 months area of demand, probably, or 12 months, or bullish engulfing pattern on the 3 months, on the 6 months or 12 months. I'm going to look at it now. So we're having higher low, two valleys attacking that supply area with a bullish engulfing pattern. That means obviously that we can go short there. But even if we wanted to, we know already that we have demand eliminated. But since the 3 months is consolidating, shorts are only allowed in confirmation. So we can go short. Okay, so let me take a look at the 6 months and 12 months and see what we have right there. Oh my God. As I expected. What do we have down there? Anyone? This is crazy. I mean, I love it in the bigger time frames. The super big time frames and the imbalances is just outstanding. Demand zone is just crazy. Said that. So look at that, my friend. We've got a 6 months area of demand. Look at that. We've got another one over there. Okay? Super strong rally and retrace. We've got another one over there. So we had one area of demand on 6 month chart. Price retrace. Took like 1 year to retrace. It took 2 years and a half to create that area of demand, and then it took 1 year and a half to retrace. It took 2 years to rally, and it only half a year to retrace, and now it's rallying again. So if anybody tells you that you don't need to take a look at the bigger picture imbalances, I mean, you see what's going on here, what's happening. It's just crazy stuff here. So we've got an uptrend on the 6 months chart, demand in control. Let me take a look at 12 month charts. No, nothing. Well, yes, we do have here another one, isn't it? Look at that. 12 months demand in control, 6 months demand in control. That's what's going on. So what is the bigger picture? Long, so long we go. So now let's take a look at the monthly chart. Okay? What is the trend on the monthly? Anyone? And we're set up. Why up? And Venue as well, up. Anybody says consolidation? I'm just asking. And War says now consolidating. It's funny when I ask if you are in doubt. Some of you will always change your mind. No, it is in an uptrend. You were right in your first statement, Anwar. Okay, it's in an uptrend. So let's do the chain analysis. So remember that we have an all-time high scenario. Okay, so we have all-time highs here, there as well. So if we have all-time highs, isn't this a bullish impulse strong enough to consolidate away? And look at the bullish ERC candle, crazy stuff. Okay, so it created an area of demand right there. Okay, so now we look at that rally base engulfing pattern, no consolidation away again. Okay, so no longs there after a super strong rally. So price continues to drop and eliminates this area of demand. So isn't that an area of supply? Because of that? It is. And look at that. 1, 2, 3 ESC candles. Crazy. Super strong area. And what happened? Out. Eliminated. Eliminated. Why did you think that one was eliminated? What could be the reason? If that one is eliminated, then we've got an area of demand right there. So, supply eliminated, okay? Demand created, plus 2 valleys connected by a bullish trend line equals to an uptrend as per the rules. That's the uptrend. So we've got the chain analysis connecting everything here, the bullish impulse, the all-time highs, consolidation away, okay, no consolidation away here, no longs, new area of supply, okay, there. That would have been a trade on the monthly, but it just lasted like not too much until there. Okay, it would have been a loss depending on, let me take a look at that, I'm curious about it. Where was that monthly area of demand? Down over there on the 3 months area of demand. So we've got a 3 months area of demand over there. Right there. That would have been a loss. Right there. Which is pretty strong there. Bullishing of the pattern confluence and all that. Would have been a loss. So we had the 3 months area, 6 months area of demand in control. So 6 months area of demand in control, 12 months area of demand in control. Okay, rallying. It's not a good idea to go short because we have a bigger picture uptrend, and that's why that area of supply has been eliminated. And in its place, we have now a super strong area of demand. So we have a monthly uptrend. If you are trading the monthly sequence, we already have the monthly consolidating away. So longs will be possible in the monthly sequence right there. Make sense? All good? So let's have a look at the weekly chart. So look at the weekly chart. What is the trend on the weekly? Up, exactly. So we have here the 2 valleys being connected. We've got 1 valley here, another valley there, 2 valleys. So we had demand on the weekly that would have been like a winner, okay? And once it broke that area of demand, it created supply, okay? So if that area of supply has been created, then this one should be the one responsible for eliminating that area of supply. So here on the left side, we've got the triangle will be broken and all that. This is demand, very poor demand, consolidation away. So we do have an area of supply right there at the top. Okay, tested already. So on the weekly sequence, it would have been great to have this. Okay, and then price rallying again. Now this weekly area of demand, does it have any confluence? That one? Anyone? I see you are back now, Embry. I guess you resetted your computer. Trend line confluence? Well, not really, because by the time price reaches that area, price will be like that, and then the trend line will be broken. Exactly, Renu. He said that. He said it. It's nested within a monthly area of demand. So if we read price action here, this is like a month. And remember what we were saying before? Let me use the crosshair. Look at the crosshair. Where is it? Right there. So it is nested within the monthly area, which is great as well. So we have weekly area demand nested within the monthly area. So on the monthly and the weekly sequence, we already have a trade down there. Okay? And on the daily, right at the origin of the move, we've got one over there as well. Okay? Another one over there. So daily area of demand nested within the weekly and the monthly would never, I mean, if you are trading the daily and all that, so look at where the daily is. So that means that the stop loss would be like there and not underneath the weekly area of demand. So if I were to trade the daily imbalance, I would do something like that, but I will use the weekly, maybe half of the weekly, okay, and then the stop loss right there. But taking an area of demand like that, okay, the basin is not the best in the world, so you could have price dropping a little bit lower, and then from there rally again, and you could be out of the trade and kicking your head against the wall because you were out of the trade and then price rallying again. Okay, makes sense? Any questions about this scenario on Tiffany? Nothing? Okay, so let's analyze now the one that Embry said. Okay, Shanghai Composite. That's an index. Okay, any questions about this one, Embry? So what do we have here? Let's use this. Okay, good. So this is what we have right now. No, okay, so we have all-time highs here. So if that is an all-time high, what do we have here? Sorry, demand. Look at that. After more than a year, price retraces to the origin of the move, right there. This is like magic, but it is not magic. It's just supply and demand. So in an uptrend, basing candle, rally, broke all-time highs, 1, 2, 3, 4 ESC candle. It loses steam and then drops all the way down there after 2.5 years almost, or 2 years, and then rallies and give us a really nice trade, and it's been running ever since. So is that the closest demand? Do we have any other demand area? Can you point out any or supply area? Embry, below it? That one over there? Are you referring to that one? And where? He's referring to that one, but any other? That's demand because of the trend line break. So we've got that, and we've got the area of demand down there. Where? Venu, the other one, 4 ESCs, that one over there, exactly. Does this bullish impulse resemble to anything on the cryptocurrency world? And where? Venu, super similar. I mean, just crazy. Bitcoin, the same thing. What about this? Bitcoin, same thing. After a very strong rally, we are expecting a bigger retracement. I mean, it's just like for dummies. I mean, repeating all this every single time. What happens? Why do we lose money as traders? Because when prices are up there, we will see a very strong area of demand there on the weekly or the monthly, and then we will convince ourselves that that area is going to hold because it's super strong, and we will on purpose, intentionally forget about this rally. Our ego will say, no, no, no. I've seen some scenarios where areas of demand at the interchange zone in the monthly or the weekly play out nicely. This is one is going to work. You haven't had a trade for a week or for 2 or for 3 days. Last 2, 3 trades there were losses. This one is going to work. No, it doesn't. You don't have to do that. You have to wait and wait and wait. And if you don't have enough assets in your portfolio, in your watch list, add more and more and more. And wait for these kind of imbalances, like this one. Okay, I'm not telling you, oh, hey, you're going to have to wait 2 years to place a trade. That's crazy. But since you have this one and many others, hundreds of them, then you're going to have alerts almost every single day. Because I do have alerts every single day. So it happens like that. So what Venu, I think, is referring to this one. So we've got here, you could be inclined to draw the trend line like that. Yeah. Is that correct, Venu? Or Anwar, is that trend line correct? Anwar says yes, Said no, Venu says yes. Well, Said is right. It is not correct. I did it on purpose. Why? Why isn't it correct? Because I intentionally started from there, and in order to draw a bearish trend line, where do we have to start drawing the trend line? Where? At the top? No. We have to start at the bottom. In order to do it correctly, okay, we should start always at the bottom. So if we start at the bottom right there, and we go back in time, we go back up and left, is this a pause or a peak, Venu? A peak. So that's why this trend line is incorrect, because it is not connecting the latest peak. So the correct trend line would be this one connected with the one at the top. The result is exactly the same. So in this case, even if you had the trend line wrong, if you had this trend line, the result would be the same. Why? Because all this is the consolidation away. So it doesn't really matter. Okay, but many times it will matter. Okay, so in this case, it doesn't. All good? So we've got a very strong area of demand on the 3 months chart, which is great. So we were waiting for price to drop all the way down there, but just couldn't. So what do we have here? We've got, again, 2 peaks, but no demand created. But what do we have here? Anyone? We've got, yes, correct, a bullish engulfing pattern on the 3 months chart. So we can use that as confluence. So let's now take a look at the smaller time frames. We are going to start with the monthly. Well, what happened there? Anyone can tell me? Can you explain or tell me something about all this price action there and all that? Once you have the experience, it's pretty easy to, you don't really need to draw anything. Anwar is asking, would be a good idea to have a 20 MA? We don't really need it, really. Okay, we can use it as it is using the strategy as confluence, but right now we don't really need it. You're gonna see that we don't need it. Said nothing here. So what do we have here? Price action over there, right there. So let's start from the bottom. Okay, don't we have, well, from the top, peak, drop base 1, drop base 2, drop base 3, 3 CPs. So if we have 3 CPs, then we should have a bearish trend line. And if we have a bearish trend line and it is broken solidly with 1, 2, 3, like 10 candles, then we've got a 3 months area of demand, a monthly area of demand. That's what we have. Is this trend line broken like that? Okay, no, that is incorrect. Okay, I did something wrong. It is from there to there, but then we have overextension. But then we also have this. We have here 2 valleys, so we should have supply there. Okay. Oops, what happened there? Oh, come on, Control Z. Let's go back in time. Okay, there it is. Okay, good. So we have the 3 months like this. Okay, this is the correct way of drawing trend lines. So now let me ask you one thing here. It's ranging, so like Anwar said, so we have 3 months supply at the top and demand at the bottom. So which of the two scores higher? Supply or demand? And why? This is A. Which one scores high? And this is B. A. correct side. This is way stronger. So look at this. One ERC, sort of a failed ERC candle. Okay, that's it. And in this one, we have two ERC candles. Price loses steam, almost reached the 3 months area of supply, tried to reach the monthly area of demand, and it couldn't. And this bullish impulse here is what on a bigger time frame? Niraj, Ovenu, Syed, Anwar, Neil. 3-month candle, but what type of candle? What did we say before in the 3-month analysis? Bullish engulfing pattern, correct, Neil. Exactly. So let me do this. This price action there. Okay. Monthly average demand is right there. Not only a bullish engulfing pattern, but what is special about this bullish engulfing pattern? I'm going to give you a hint. What is special about it? Because usually we use the engulfing patterns as confluence, but this one has something even better. Even better. What is it? It's related to this candle, right? Exactly. Neil said that. He nailed it. Consolidation away. This bullish impulse engulfing pattern also consolidated away with that candle over there. Right there. Okay, so that's why I gave you this hint. Okay, this is consolidation away. That's even better. Then it retested the open of the engulfed candle and then trying to rally again. Okay, so we are allowed to go long. If anything, we are only allowed to go long in this index, Shanghai Composite Index. So what do we have here? Now let's take a look at the weekly. Wow. On the weekly, we've got a very strong area of demand right there. And this is nested where? It is nested within the monthly and the demand area after overextension and the bullish engulfing pattern that did consolidate away on the 3 months. So it is a pity that price did not retrace to that area, because look at that. Crazy. So what do we have here? Anyone can tell me? A demand at 280, correct? 2800, yes, correct. But we have demand there. Why? Peak. I sounded like the Roadrunner. Peak. So we have demand right at the stream. If this one had been a basing candle, then it would have been demand. So that is what we have there. But there is something else happening now. What else? Can you tell me? What else? To correct. Yeah, you said that. Yeah, and Neil, and another demand. Yes, Neil and Anwar are right. Exactly. So we could have not demand. It's not there yet, I believe. Let me read price action one candle by candle. Okay, this is a peak. Okay, this is another peak. So the trend line is not broken yet, but we are having an area demand created there, being created. So if we do the chain analysis here, okay, that was supply there, demand over there. That is supply over there, which was eliminated by this demand over here. If this was demand, then this was supply. So this bearish gap with a pause is supply. So we have two options here. Okay, if this trend line is broken next week with a candle over there, right there, we're going to have demand there. And also, if it continues to rally and eliminates this area of supply, we're going to have demand there as well. Unless, okay, price pauses there for 1 or 2 weeks, 1 week at least, and then rallies and eliminates that area of supply. That means that we would have an area of demand there and an area of demand here. And an uptrend. Makes sense? How you have to project what might happen in the future depending on the price action that you see. All good? So far, so good? So we are expecting one area of demand to be created right there if it passes. Else, it will be demand there if it breaks the trend line and it eliminates the opposing area of supply. That's what we have to wait for. So longs are weekly areas of demand and daily areas of demand. So on the daily, we have here this scenario. We have trend line break, supply eliminated. Okay, so demand, that is supply, which is in control. So we have an area of supply right there. Come on. Right there, which has already been tested, almost eliminated. Okay, almost eliminated. But then we've got here, we're going to do the chain analysis right there. Then we've got demand eliminated by supply. If this is supply, and this is demand. So as you can see, everything is connected. And this is pretty strong. Okay, pretty strong. If you take a look at the daily chart, this is the stronger impulse in wicks. Okay, because this is not as strong. Having 3 consecutive ERCs, not available anywhere on the chart. Only one ERC there, widest ERC, nothing else. So longs could be possible there if it retraces. Make sense? Embry, you were the one asking for this one. Make sense all this? So you have to pay attention to the price action, to the chain analysis, to where these imbalances are located, if they are located within an area of demand or a bigger time frame area of demand or supply, and if there are bullish engulfing pattern being created, if there is overextension, if there is consolidation away, like this one over here, rally base, rally or drop rally, no consolidation away with supply, no supply, but very strong impulse in control. I mean, it is something you have to pay attention to. I mean, this trend line is incorrect. Should be like that. There's another value over there, but the result is the same. Okay, so this is the Shanghai Composite Index. Now let's jump to, okay, Venu is asking for a stock SBING. So let me add it to the watch list here, MB. Okay. Embry is saying the picture is different from the voice. The picture is low. Sometimes I can't answer you. So, but it must be something on your side, Embry, because nobody else is reporting such a problem. So you will have to wait for the video recording, maybe. Okay. I'm sorry. I just can't do anything about that. I mean, it must be your side, not my side. Otherwise, everyone would be experiencing that latency, that delay. So, okay. So, the news said SBING, so I added it. And Niraj asked for TCS. TCS. So, which is Tata Consultancies, isn't it? Tata Consultancy. That one. And then another one. TCS. Okay, good. Infi. Okay. So we have 3 right now. Let's go one by one. So first one, SBING. What do we have on 3 months chart? Up, but what do we have? Demand in control. Okay, we've got an uptrend. Why do we have an uptrend? Because we can connect two bullish impulses and valleys. This is all-time high. No price action there. Okay, so we have a strong rally, and then it retraces right to the origin of the move. 3 months demand control. So longs where? Longs are new areas of demand on the weekly time frame. Why? Because the 3 months is made of the 3 months sequence, 3 months, monthly, and weekly. So 3 months in an uptrend, long bias. We've got 3 months demand in control right there, longs, monthly, and weekly areas of demand. That's what we have to do. But by looking at this bearish engulfing pattern, it looks that there should be a monthly, at least a monthly area of supply with nested supply on the weekly. So very bad price action, this one over here. Pretty bad for set and forget. So this is all-time highs. Okay, all-time highs right there. So if that is at all-time high, this is demand. And as you can see, this demand area has not accomplished 2 to 1 probably, and only 1 ESC candle and not super strong. So it was eliminated by this area of supply. So we've got supply price too high in the monthly range. Okay, with a monthly area of supply nested within a 3 months area of supply, and a super strong weekly area of demand right at the top. Okay, so shorts will be possible there. Okay, right there, because of that. But price is falling short and created a bearish engulfing pattern, not all-time highs. Well, that's all I have. Do you have more price action on this one? Irash? Because I don't have any more price action. Maybe BESE? Nope, same thing. So that's all-time highs. Okay. Sometimes TradingView doesn't show all price action, but all history, but it looks like this stock started over there. Okay. So what do we have? What trend do we have on the monthly? Okay, Niraj, no problem. Anwar says consolidation. Niraj, what is the trend on this one? Or anyone? Neil, Saad, Venu, and Bree? Okay. We have this. Isn't it? Over there. One area of demand has been eliminated. All-time high. So we have supply over there. Do we have any other area of demand over here? I don't see. I see an area of demand there. All-time highs. I see an area of supply eliminated. I see demand in there, but nothing like that. So if we had had two areas of demand eliminated, then we would have a monthly downtrend. But now we are too high. We have to wait for new areas of supply to be created. What is the entry time frame on the monthly sequence? The monthly sequence is the daily. So we have to wait for new areas of supply to be created on the daily. Okay. Many times, well, it will depend. This level could be drawn like that, a little bit wider. We definitely are not allowed to go long because we are too high in the monthly range. So what would we need in order to go short within this price action over there? New areas of supply, isn't it? On the daily, at least, because the monthly sequence is the one that we are referring to. So let's drop it down to the weekly sequence. What do we have here on the weekly sequence? Well, let me go to the weekly chart instead. Weekly supply nested within the monthly area supply, but what do we have here? That's interesting. What can we do with that price action? We've got trail line break, as Venu just pointed out, and we've got another area of demand down there. But what can you tell me about this? What can we do with that price action? Remember, the monthly area of demand, the proximal line is like shy above that area, so or very, very, very close. Bearish engulfing pattern. Can we use the bearish engulfing pattern as confluence for shorts at nested areas of supply on one time frame lower? Am I not repeating that every single day in the analysis and the community? I mean, I'm just doing it every single day. I don't know how many times. Okay, I just lost count at hundreds, if not thousands of times. So would it be good to trade a daily area of supply nested off that bearish engulfing pattern on the weekly? Would that be a good option? Yes? Okay, good. Yes, yes. So let's take a look at the daily. Do we have an area of supply in the daily? Anyone? I already read the price action and it looks like we have an area of supply. Why? Because we have here, okay, an area of supply there, an area of demand there. But not only that, we have, this is a pause, peak, valley. So we've got that one over there at the extreme, but this is demand, and this is supply. Right there. So we've got an area of supply trying to play out already from the monthly area of supply, bearish engulfing pattern on the 3 months as confluence, weekly bearish engulfing pattern as confluence. So that is a valid trade as confirmation, because remember, month is consolidating. We have to wait for price action to tell us that we are allowed to go short. Now there is confirmation, quote unquote confirmation, new areas of supply in the entry time frame being created as a result of a reaction to these confluences, and that's the one that is trying to play out. Make sense? How we arrive, how we connected this daily area of supply with the weekly bearish engulfing pattern, with the altitude on the monthly range, and the confluence on the 3 months bearish engulfing pattern. And then we go back to the same thing, and then we connect it all. Said, he's saying, but there is no consolidation away on the weekly. What am I saying always in the community? The engulfing patterns are used as confluences. We don't need them to consolidate away. Consolidation away is for the imbalances. If there is no consolidation away, no imbalance. But confluences do not need to consolidate away. If they consolidate away, even better. Even better. Remember what we said before about the Shanghai Composite? We had bullish engulfing pattern as confluence, and I pointed out, and Neil said consolidation away happened on top of the confluence. On top of it, I mean, besides the confluence, we had consolidation away besides, on top of, plus. Make sense, Syed? Okay, good. So if you want to go long down there in the 3 month sequence, because it's a brand new area of demand, pretty strong, off the 3 months area of demand. But if you want to go short because you are trading the monthly sequence, or you are a counter trend trader, this is a trade. Okay, aggressive because it's counter trend, so you have to say, okay, it's a counter trend trade, and if I got a loss for being that aggressive, up to me, because I took it. I would prefer to wait patiently for going long on there. Okay, good? Good, good. Perfect. So now let's take a look at INFI, or how do you pronounce this? INFI or INFI or Infosys Ltd. Okay, good. Okay, good. What is the trend on the 3 months chart? I can see a strong area of demand over there. I'm going to draw it like this, okay? Taking the full candle. So we've got an uptrend, and we've got here a bullish engulfing pattern confluence. Probably price could end up like a bullish pink candle or a hammer. If it closes like that, it will be a bearish engulfing pattern, but if it closes like that, it will be a dark cloud cover or a bullish hammer, which has got another name. I don't remember. It doesn't really matter. A bullish, a lower wick, very, very white. Okay, so no consolidation away here. I mean, you are not looking at 3 months chart, you would miss this. No consolidation away. No consolidation away. Consolidation away happened there. Price tried to retrace, but it couldn't. It engulfed, probably creating no lower time frame areas of demand on the weekly, monthly, daily, and then continued to rally it, and now broke all-time highs again. No consolidation away, and look what happened. So let's see what we had in the middle time frames. We've got the monthly in an uptrend. Okay? We did have an area of demand over there. Okay? But this area of demand had 2 ESCs. Okay? 1 R hardly. Okay? Hardly. Barely 2 to 1. Okay? Demand eliminated, supply created. So even if you wanted to trade this long, it wouldn't have been allowed. Why? Because this area of demand on the monthly is nested right within a 3 months area of demand that has not, 3 months impulse, okay, that has not consolidated away. It played out for some time in the monthly sequence, okay, in the monthly sequence, not on the on the other sequence, on the 3 month sequence, but it then dropped and eliminated it. Okay, so let me read the questions here. Embry, bull and bearish engulfing confluence, no needs consolidation away. No, I mean those are confluences. Okay, so when we are using the top time frame as our direction, then we use the monthly and the lower time frames as new areas of demand or new imbalances to go along, and then we also use confluences. Okay, this is very, very common to have sorry, a very strong rally, an engulfing pattern, a rally, and a fake out. That's super common because it comes after a very strong rally. Okay, that is not good at all. Let me take a look at the 6 month chart. If you take the 6 month chart into account, look at that. I mean, if you are a long-term trader and waiting for long-term opportunities from 500 and all that, having the opportunity to make like 2-3 times your investment, so it is down there where you should be going long. Look at that price action, same thing, and then dropped to where? Out there, right there. So this is very, very, very common. You should pay attention to this. The origin of the moves are right there, so we need to wait for confirmation. So if another thing is this, I mean, these are two different scenarios. Let me explain it now a little bit more clearly. Okay, let me use a blank space. Okay, I think this is going to help. So we've got okay, we've got a new area of demand over there on any time frame. Okay, let's say, well, I'm talking about the monthly area of demand. Okay, we've got now 1, 2, 3 ERCs. Okay, and suddenly we've got a bullish engulfing pattern. Okay, price drops into that area. Can we go long there? No. So why am I saying many times that we can use the engulfing patterns at confluence? Isn't that an example? Wouldn't I be contradicting myself in what I'm saying? Do you understand what I'm trying to say? I mean, we've got a very strong rally. We've got a bullish engulfing pattern. Okay? Let me paint it a little bit better with the rectangle tool. bullish engulfing pattern. Demand here. Okay? Demand there. Let me erase this. Okay? And the bullish engulfing pattern happened after a super strong rally. Can we use this bullish engulfing pattern as confluence? What do you think? What does logic tell you about that? They're saying no, 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 but why? What do you think? I mean, it would be great to have a room here, like we do have in the meetups in London, Tenerife, and all that, where we can discuss about this. It's very complicated right now in a chat box. Okay? With bearish engulfing pattern as confirmation? No, I mean, I'm not talking about that, Neil. This is a bullish. A bearish, yeah, but what I'm trying to say, let me picture now a very different scenario, and I think you're going to understand. Okay? So now let's use this scenario. So imagine price does not respect that and all that and starts dropping. Starts dropping to the area of demand. Any time frame, remember, it doesn't really matter. Okay? And right there, we get a bullish engulfing pattern. So this is a scenario, let's say, 1. This is scenario 2. Now, try to think about it for a few seconds, okay? But because I think this is going to change the way you look at the charts, hopefully. So, what is the difference between these two scenarios? I'm going to wait for you to, okay, all of you, try please. What is the difference? I mean, tell me, can we, come on, no way, it deleted, it went away. Come on, crazy this application. What I'm trying to say here is that, I'm going to do it very, very fast, okay? An area of demand, now we've got a bullish engulfing pattern here, and a bullish engulfing pattern here, okay? This is after, okay, this is number 1, this is number 2. So which one, both are bullish engulfing pattern, okay? So can we use both of them as confluences? Only one? Only two? Both? Why? Anwar, the one in the demand zone is confluence. And why not two, Anwar? Why not this one? Side shows the real buyers, but which one shows the real buyers? Neil, I mean, at 1 we would need bearish confluence candle for confluence. Yes, correct, Neil. So 2. So let me explain to you. Let me explain to you the logic behind all this. If you follow my rationale, probably will change the way you look at the charts and the confluences, because I'm explaining it in the community, but sometimes, or not sometimes, quite often, you will be asking the same question, and there are so many scenarios. But what is the difference here? The difference is very, very important. What do mean? It's related to the fact of the strength of the impulsive move of the prior impulsive move. So when you have a very strong rally, what are you expecting? What are we expecting? Drop to where? To the origin of the move, isn't it? That's what we are expecting. So if we got a strong rally and we get a bullish engulfing pattern, what are we expecting? We still are expecting this. Makes sense? We still expect the decline, the drop, the retracement, the correction. We're still expecting. I mean, the bullish engulfing pattern doesn't change anything. But it changes the way that you are looking at the chart at the moment and say, okay, wow, I'm going to miss the trade. Price is not going to retrace. And then it engulfs and then drops again. So after a very strong rally, engulfing patterns are not good to be used as confluences. Make sense what I'm trying to say? After a very strong rally, no way. But what is the difference between scenario 1 and scenario 2? Is that the scenario 2 price declines and drops to a very strong area of demand on any time frame. It doesn't really matter. Okay? And then once price retraces down there, then the two candles engulfing is showing us the real market filling sentiment. We have new buyers. The new candle engulfs the previous candle, and it is being engulfed right in the right context, in the right location. Make sense what I'm trying to say? This is not the right context, neither the right context, not context, nor the right location. There is no nested imbalance up there, okay? Unless we have, imagine that we had, like Neil said before, imagine, or was trying to say, the bearish engulfing pattern. Imagine we have a monthly area of supply there. Then an engulfing pattern will be great for confluence, but not a bullish. We will need a bearish. Makes sense? Makes sense what I'm trying to say? So one would have been confluence if there was supply. Exactly. But after a very strong rally, we are expecting a bigger retracement. We get a bullish engulfing pattern. This could be a trick. I mean, don't believe that. I mean, will that many times provoke another bullish impulse? Yes, okay, then if it consolidates away and there is no overextension, no opposing imbalance in control, supply in this case, okay, no problem. You can go and trade it. But it is better to use confluences, engulfing patterns as a reaction to something, I mean, in the context of something, at the right location, rather than out of nowhere. So all-time highs, okay, all-time highs after a very strong rally, bullish engulfing pattern, no good, my friend. No consolidation away, no good. That's why I said before here, this is not good. Why? Because after a strong rally engulfing pattern, we are waiting this, okay? It almost did, okay? So whichever imbalance on the lower time frames that we have there, we should pay attention, close attention to it, because it is not a set and forget trade, because the set and forget trade is here. Because after a very strong rally, we're waiting for this. So that's set and forget. This is not set and forget. No matter how many confluences there are there. Makes sense? All good now? Yes? The consolidation away and the engulfing patterns are very, very complex. There are so many different scenarios. It is super complex. So you have to test it, ask questions, and watch the charts for hundreds of hours until you really understand them. Okay? But the logic behind it is that the more confluences, and obviously the confluences, if we use imbalances as confluences, I mean, that's what we want, really. That's what we want. So it's like here, this is all-time high again. So what do we have here? That. What do we have here? Same thing. No consolidation away. And then what happened? Drops to where? The demand area, my friend. So that's what we were waiting there. It took 2 years to do it. So on the way down, you could trade a lower time frame, monthly, weekly, bearish sequences, and all that. Once it reaches the 3 months area demand, go long. Okay? Does it make sense? Yep. Okay, good. So that's Infosys. Let's take a look at TCS. TCS. Okay, wow. Okay, good. So this is what we have on TCS. There is another high over there. So we have trend line, well, difficult to draw it, uptrend. Okay, this should be a 3 months, 12 months area of demand. 6 months for sure, 12 months as well. Okay, so bigger picture, uptrend. Bigger picture, uptrend, no consolidation away. Bigger picture, uptrend, no consolidation away. So we have now on the monthly here, all-time highs were broken by this impulse over there. So we've got the lower low there, right there, monthly demand in control. This is not a great area of demand, Okay, it's under attack, but what do we have here, my friend? That one was the one. Okay, that is the one. Okay, so look at that. 1, 2, 3, 4. That's the one. But this one, only one ERC, not good. It's playing out, okay, but not good. That one was the one. That would have been great. And that one as well at the beginning of the move. But now price has been rallying for a long time. And we are having a bearish engulfing pattern, another bearish engulfing pattern, another bearish engulfing pattern. So this is nothing like this. Has nothing to do with this price action. Okay? So no set and forget longs, only confirmation. Okay? So price retraces down there. So what do we have here? Tricky price action. Many red candles there. All-time highs, demand, supply, eliminated by demand here. I mean, I'm gonna do it a little bit slower. Okay, this is supply, eliminated. This didn't remember again, no consolidation away. So nothing. Remember, this is after a very strong rally within all that mess that we are talking about. No good. So we've got the impulse that remove that one over there is this one over here. So this one demand eliminated. So this one is supply. So we end up with supply. And it happens to be super strong. 1, 2, 3, 4. Okay. So this is what we have right now. This is okay, demand, but no, this is not demand, nothing. Okay, supply is in control right now. This is not demand because, okay, this is not demand. Why? Because this is not supply, and supply is here in control. So there was no trend line over there, so nothing available. Okay, so tricky price action. This one, TCS, not good for trading right now. That's what I would conclude. Not good at all. If you're trading the weekly sequence and the monthly sequence, confirmation for shorts there, confirmation for longs down there. We've got an area of demand down there. If you're trading the smaller time frames, we've got that one over there, which is 3 ERCs. Much better, way better than this. Okay, this is pretty solid and well-formed price action. This is very poor price action. So if you're trading the lower time frames and all that, that would be a nice one. But for the bigger picture, not good. All good, Venu and everyone? Okay, good. So let's take a look at Tesla. Okay? Breaking all-time highs again, my friends. So what happened on Tesla? I mean, remember me, I don't watch TV much, only sometimes a documentary or some series on Netflix, really. I really like documentaries about anything, okay? So, but no matter what, my friends were talking about Tesla, about all the things that were happening to Elon Musk, and that he was having problems, and it was affecting the company as a CEO and all that, and then price was like dropping and all that. So everyone was talking about Tesla. Now I don't see anyone talking about Tesla. Okay, so what happened? Negative news earnings, and what happened? It dropped to where? 3 months average demand. It would be great to show samples, if any, on confirmation entries during the course of the webinar. We have already seen a few, Anwar. Daily supply zone of bearish engulfing pattern and all that. I mean, new areas of demand created on here, not us being there as confirmation of 3 months average demand. I mean, we have already taken a few. So where were you, my friend? Quite a few, really. So that area of demand happens to be also a 6 months area of demand. Okay, 6 months area of demand in uptrend, 3 months area of demand. Okay, and price is rolling. Now nobody talks about Tesla. Okay, So they were interested in sellers, and they got them, and now they've got the rally. Okay, so now we have a bullish trend line, uptrend again. At the end of March 2020, we're going to have 3 months area of demand, and we already have a monthly area of demand over there, responsible for eliminating that monthly area supply. This is done in the stock analysis, okay, and stock channels as well. This area of demand supply, sorry, was responsible for eliminating this area of use up area of demand, okay. That was a trade there. Supply eliminated, demand created. Okay. Okay. You mean more examples? Okay. You've got another one over here. Monthly demand area as confirmation of 3 months area of demand. 3 months area of demand being created as confirmation of 3 months and 6 months area of demand. That's what confirmation is. New levels of new imbalances created as a reaction to prior imbalances. Make sense, Anwar? That's the definition of confirmation. So we have, okay, here at all-time highs, we've got trend line break, okay? We've got now supply eliminated. So what do we have here? Demand created. This is a valley, okay? Not a pause. So we've got an uptrend. So if you were to be trading the weekly sequence, you already have, or you will have, a weekly area of demand right here after this week's candle closes and consolidates away. Makes sense? So longs are weekly areas of demand on the weekly sequence. If you are trading the monthly sequence, you've got already another monthly uptrend. New longs are monthly areas of demand and weekly areas of demand. So you're trading the daily sequence, you already have daily area of demand over there. Not that great, okay? This one is even better. Okay, so it all depends on the sequence that you're trading. Niraj, can it be set and forget? Which one are you referring to? Because I am talking about the 3-month sequence, the monthly sequence, the weekly area of demand. So you have to be specific in your question. I mean, as to which sequence you are referring to. So in the weekly sequence, you can go long there, set and forget. Weekly sequence. Yes, on the weekly sequence, yes. On the 3-month sequence, you need that to consolidate away. On the monthly sequence, we already have the monthly. So it depends on the sequence that we are trading. Okay? So let's take a look at Roku, unless you have some other asset, stock, forex, cross pair to look at. I'm going to look, before Roku, I'm going to look at the pound CAD because many pound cross pairs are doing exactly the same thing as noted and explained in the analysis. So we have here on the 3 months, okay, 3 months area. This is happening on many pound cross pairs. So this analysis will be probably valid for most of them. Okay. So 3 months area of demand, all-time lows and all that, tested and then rallying as expected. But what do we have right now on the monthly? On the monthly, we have this. Trend line broken and monthly supply in control again, together with a super strong bullish bearish impulse. Sorry. So only shorts are allowed. So look at that. Last month and look at this month, we already have a Greystone doji that could potentially be forming like a shooting star of the right location with 3 months bearish engulfing pattern as well. So price could drop all the way down there and then longs again down there. But right now, no longs allowed, only shorts. So we've got the weekly we've got now, on the weekly, we've got a weekly area of demand. Why is that demand? Because we had supply at the top here, trend line break and all that, eliminated. What wasn't eliminated? One sec. It wasn't. No, because on the monthly it wasn't. So that was not. So this is not, unless it removes that is, okay. So nothing here, nothing there. So this is not demand because this one was not eliminated. So this is the abolish impulse. So we've got bearish engulfing pattern at the end of the week. If it stays like that, we can use it as confluence. So we can have a bearish engulfing pattern on the weekly as confluence of the 3 months bearish engulfing pattern and supply and control. So we have, at least we have the right location, okay, for the confluence. Make sense? This is the right location. We have the supply and control, we have the bearish engulfing patterns, we have the pink candles, and new area of supply being created. So we need consolidation away, supply being created. Make sense? That's a pound card and happening on almost all the pound cross pairs. Besides, okay, there was supply over there, eliminated, and look at this area of demand. Okay, 2 to 1, but not a single, well, one ERC candle, but that is not the type of ERC candle we want. I mean, this looks almost like a failed ERC. Okay, we want this kind of ERC candles. We don't want this candle with super an upper wick which is like as wide as the entire candlestick body. Makes sense? We want this. This is what we want. 2 ERCs like that. Or alternatively, one super strong single ERC. But no, not a single one? No way. It would have been great to go long if the area of supply here on the weekly, monthly was eliminated, then 2 ERCs there. Great, but it is not what happened. Okay? Any questions about this scenario? No? Okay, so we have time for one more. Do you want me to take a look? Well, the euro pound should be is exactly the same as the pound cat, but upside down. The pound also is the same one as the pound cat. Any specific asset you want to look at? We have time for one more. So I can choose any of this that I had on my watch list, or you can tell me which one to look at, and I will do it happily. So unless you don't recommend me or you don't have any proposals, I'm going to choose the next one on the list. So I'm going to choose Roku. Okay, here it is, my friend. So Roku, 3 months uptrend, 3 months demand zone. But what is going on right now on Roku's 3 months time frame? Would you go long now? Anwar, Niraj, Neil, Saad, Embry, Benu? There's no overextension, Benu, because in order to have overextension, we requires 3 CPs. There's not a single one. So overextension out of the way. Not possible. You wouldn't go long. Why no? Everybody's saying no, 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 but for what reason? No longs. Just the 3 months time frame is, I mean, there's something that is telling you, hey, no way. No way. Side says that it shows weakness. Look at this. Pink candle. I mean, this doesn't happen because a few retail traders decide to close their small positions on Roku. No way. This is not happening because a few retailers have decided to take profit. This happens because something bigger is happening. Makes sense? So let's take a look at the monthly. There was an area of demand there, no retracement, no consolidation away, and look at this. The 3 months bearish candle, pink candle, is all this. We've got a very solid bearish engulfing pattern on the monthly. So potential shorts can happen on if new weekly and daily areas of supply are created within this. Okay? And where a lot of sellers are there. Yeah, and not common sellers or retailers like you and me, but other kind of sellers that can move the market that way. Okay, so the monthly price action is telling us, hey, no longs either, sorry. And what happened here? That it happened this. Demand here. Why is that demand? Because this is all-time highs. Bullish impulse, consolidation away. That is the area of demand. Okay? But what happened? That this area of demand over there, okay, that one would have been a loss. Okay? On the monthly, okay, let me see, that was there. Consolidation away had not happened, but that area of demand, let me sync it to all the charts, and it was there, so it would have been valid, but it didn't work. Okay, that one would have been valid, but it didn't work. So price retraced the monthly, weekly area of demand, but here no consolidation away, so confirmation is needed for longs. Confirmation didn't happen, so that weekly area of demand was eliminated. So we have weekly supply in control right there, trying to attack it again, but just can't. So we've got new areas of supply created here. Oops, I think I selected the wrong tool, where we got a one nested at the top. Well, there's something great I've learned the other day on TradingView, which is the, well, you select any object and you hold the control key, you can clone it. That's been there for ages. But I didn't know that when you select any of these control points here and you hold the control key, you can, it's like a magnet. So if I want to draw the level correctly, so I want to use the close, I can use the close, the low, the open, the high. Okay, so imagine I want to draw the level on there. I select here, I press, hold the control key, okay, and it snaps to the low there, to the tick, and then to the close. That's great. I love it. I'm using it all the time. So if you are using TradingView, that's going to help you a lot. That's why you see the rectangle like moving like that all the time. Yeah, I knew about that, but the control key is there, the shortcut. I hadn't seen it. Thank you, Venu. So valley, another valley. So we've got another area of supply right there with a bearish gap. Okay, that would have been nice again for shorts. Okay, there is a very strong area of demand down there, but since weekly area of supply is in control and daily area of supply here, as you can see, going long down there cannot be used to set and forget. So what I wanted to show this scenario because it is not clear at all. That's why I wanted to show it. It's not clear at all. But if we take a look at Valero Energy, this will be the last one. Okay, we've got 3 months area of demand again. Okay, again in control, which is also a 6 months area of demand. So what do? We go long and here's the demand. So on the monthly, okay, we've got here a valley and another valley. Almost consolidated away. It didn't consolidate away, so this is not supply. Okay, bullish engulfing balance confluence. Supply is at the top. Demand is being eliminated. And on the weekly, we've got this. On the weekly, we have a valley there and another valley there. Chain analysis. Then we've got supply eliminated. And if we've got supply eliminated, then we've got, you can use it like that. I mean, you can draw, the level would be something like this, but you can protect it like that. Okay, be aware of that. We can draw it both ways. So what about the scoring of this level? We have 1, 2, 3 ESC candles, great base, accomplish the elimination of the area of supply, we've got an uptrend. If you are trading the weekly sequence, that's what you have to go long, sorry. I mean, this is textbook on the weekly sequence. Okay? So it took 1, 2, 3 weeks to rally, 3 weeks to lose steam a little bit to create an evening star. 3 ESCs is pausing, and if it drops down there, that's what we are expecting. Okay, that's what we are expecting. So this is much clearer. And if you compare this analysis with Roku's is a pain in the, I'm not going to say the name. It's very difficult. You have to move back and forward between time frames, the bearish pink candles, the engulfing patterns, counter trend, blah, blah, blah. It's super complicated. But when you look at Valero, come on, my friend, it's just obvious. So which one do you want to trade? Roku because everyone is trading Roku? Is it a new streaming platform? No. I want to trade because I see a very clear setup. I don't care about the company. I don't care about the earnings. I don't care what people are talking about. I mean, this is a very strong area of supply where short will be possible again. Okay? But if we get that area of demand over there, this is if it starts rallying, it creates a bullish engulfing pattern here. Copy and paste. Imagine that. Then go to hold all the way up. Make sense? Yes? Reading price action is not easy, my friends, but with time and practice and support from each other, I think we can make it. Okay, this was the last one. Okay, there are more and many other, of course, but probably don't think next week, but this will be the last one of the year because next week is going to be the 24th, then New Year's Eve. But in the first week of January, probably we're going to have another webinar. Okay, hopefully these webinars are helping you understand supply and demand better, price action, who and why these levels are being created, who is behind these levels. Okay, hopefully I'm helping you understand that a lot. And that's everything for today. Enjoy the rest of the day and be happy, my friends. Bye bye. Thank you, everyone.